Mr. AG here. Silver is at $89. Gold is holding above 5,183. The Iran war is supposedly nearing its end according to President Trump, but Iran's Revolutionary Guard says they will decide when it's over, not Washington. The US dollar is retreating after a massive safe haven rally. Oil prices are creeping back up on Strait of Hormuz supply fears. And on Wednesday, the Consumer Price Index drops, and that single data print could reshape the entire precious metals landscape for the rest of the month. There is a lot happening right now, and none of these stories exist in isolation. They are all connected. And tonight I'm going to walk you through exactly how they connect, what levels matter, what scenarios are on the table, and what I'm watching over the next 48 hours. Both sides. Every number. No hype. First things first. Tell me where you're watching from tonight. Drop your country and your city in the comments right now. Are you tuning in from the United States, India, the Philippines, Canada, Australia, Pakistan, the UK, Nigeria, Singapore, Japan, the Middle East? I ask every time because this community has become truly global and I want to know who's here. I want to know what markets matter to you. So type it in. Let me see this community light up tonight. Now let me set the stage with what's happening on the geopolitical front because this is driving everything else right now. The Iran situation is at a very strange inflection point. President Trump has stated publicly that the US military operation in Iran is nearing its conclusion and running well ahead of the initial 4 to 5 week estimated time frame. He has also indicated plans to waive oil-related sanctions and have the U.S. Navy escort tankers through the Strait of Hormuz to help keep oil prices in check. On the surface, that sounds like de-escalation. That sounds like the conflict is winding down. And that's exactly how the currency market initially interpreted it. The dollar pulled back from its recent safe haven highs because if the war is ending, the panic bid in the dollar fades. But here is the other side of that story. Iranian officials have directly rejected Trump's characterization. Iranian leaders have stated clearly that the situation cannot be decided in Washington. The Islamic Revolutionary Guard Corps has said Iran itself will decide when it's time to stop. Those are not the words of a country preparing to surrender or negotiate. Those are the words of a country digging in. And when you have one side saying the war is almost over and the other side saying they haven't even started deciding when to stop, you have a massive gap between narrative and reality. That gap creates uncertainty. And uncertainty in the Middle East is the single most powerful catalyst for precious metals demand on the planet. Silver climbed back to $89 after briefly dipping below $80 in the previous session. That recovery was driven primarily by the dollar's retreat. When the dollar weakens, silver becomes cheaper for every non-dollar buyer globally, and international demand picks up. The dollar had been rallying hard on safe haven flows as the Middle East conflict and surging oil prices raised fears of prolonged economic disruption and resurgent inflation. But Trump's comments about the war nearing its end took the edge off that safe haven bid. The dollar softened, and silver immediately responded by moving higher. That tells you something important about current market mechanics. Silver is coiled. It is ready to move. It just needs the dollar to get out of the way. Gold, meanwhile, is trading around 5,183 on the 4-hour chart. It's sitting in a tight range just beneath resistance at 52.76 and still holding its rising trend line from late February. The 200 EMA is at 50.014 and the 50 EMA is at 51.75. Both are providing constructive medium-term support. But the candlestick patterns are telling a cautious story. Recent candles are showing smaller bodies with upper wicks, which means sellers are active near the 52.76 to 54.10 zone. They're not letting gold run freely. There's a battle happening at that resistance level, and it hasn't been resolved yet. Now let me get into the technical levels for silver, because this is where the real action is this week. Silver is trading near 89.15 on the 4-hour chart. It's pressing up against resistance at 91.20. Below, key support sits at 85.45. The 50 EMA has crossed above the 200 EMA, and both averages are now relatively flat at 84 to 86, which is providing dynamic support. The recent price action has been printing steady higher lows after that pullback to 80.50. Higher lows mean buyers are stepping in at progressively higher prices. That's accumulation behavior, not distribution. The RSI has bounced back towards 60, which tells you momentum is building to the upside, but isn't overextended yet. Here's the critical setup. If silver breaks above 91.20, the next target is $96. Between 91 and 96, there is limited structural resistance, which means the move could be fast and aggressive once that level clears. But if silver loses $85, we're looking at a retest of 80 and potentially lower. 85 is the line in the sand for the bulls this week. For gold, the levels are equally clear. Resistance at 52.76. Above that, 54.10. Support at 51.75 at the 50 EMA. Below that, 50.014 at the 200 EMA. A break above 52.76 opens up 54.10 and signals that the geopolitical bid is overwhelming the dollar headwind. A break below 51.75 puts 50.014 in play and suggests that inflation concerns and a stronger dollar are winning the tug of war. Now here's where it gets really interesting and really dangerous at the same time. Wednesday's CPI data. The Consumer Price Index report drops Wednesday, and the Personal Consumption Expenditures Price Index drops Friday. These two inflation prints have the potential to completely override the geopolitical narrative and reset the precious metals trade for the rest of March. Here's why. Oil prices are creeping back up. The Strait of Hormuz remains under threat despite Trump's comments about Navy escorts. Any rise in oil directly feeds into inflation because energy costs affect transportation, production, packaging, and the price of virtually every good and service in the economy. If CPI comes in hot on Wednesday, if inflation is rising again or even just not falling as fast as expected, the Federal Reserve's ability to cut interest rates shrinks immediately. Markets would reprice rate cut expectations lower. The dollar would strengthen. And precious metals would face a direct headwind because higher real interest rates increase the opportunity cost of holding non-yielding assets like gold and silver. That's the bearish scenario for metals this week. Hot CPI, hawkish Fed repricing, stronger dollar, metals pull back from current levels. But here's the other side. If CPI comes in soft, if inflation shows signs of cooling despite the geopolitical turbulence and the oil volatility, that gives the Fed cover to maintain or even accelerate rate cut expectations. The dollar weakens further, real interest rates compress, and gold and silver catch a dual tailwind, safe haven demand from geopolitics plus monetary easing expectations from dovish data. That combination could be the catalyst that pushes silver through 91.20 and gold through 52.76. There's also an important nuance that investors should understand about this specific CPI print. The data being released Wednesday will likely not fully reflect the impact of the Iran war on consumer prices. The conflict escalated recently, and its inflationary effects, particularly through oil and supply chain disruptions, take time to flow through to the consumer level. So even a soft CPI number this week doesn't mean inflation is solved. It might simply mean the worst of the war-driven inflation hasn't shown up in the data yet. That creates a false sense of security that could support metals in the short term, but set up a much more complicated picture for April and beyond. Now let me give you both scenarios for the rest of this week, because I refuse to only show you one side. Bearish case. CPI comes in hot Wednesday. Markets reprice Fed rate cuts lower. Dollar rallies hard. Gold rejects at 52.76 and falls back toward 50.014. Silver fails at 91.20, loses 85, and retests 80. Iran's situation de-escalates faster than expected. Safe haven premium comes out of metals entirely. Oil falls on Trump's sanctions waiver and Navy escort plans. Inflation narrative shifts toward higher for longer. Precious metals enter a corrective phase that could last weeks. This scenario is real, and you need to have a plan for it. Bullish case. CPI comes in soft or in line. Rate cut expectations hold or increase. Dollar continues retreating. Silver breaks 91.20 and runs toward 96 with momentum. Gold clears 52.76 and targets 54.10. Iran's situation remains unresolved despite Trump's optimistic comments. Revolutionary Guard statements keep geopolitical premium elevated. Oil stays elevated on Hormuz fears supporting the inflation hedge argument for metals. Safe haven demand persists. The technical breakout above 91 triggers momentum buying and short covering. Silver enters the clean chart zone above 94 with a path to the all-time high. This scenario is equally real. The honest answer is I don't know which one plays out. Nobody does. And anyone who tells you they know with certainty is either lying or selling you something. What I can tell you is the levels. What I can tell you is the data. What I can tell you is what to watch and how to interpret what you see. And that's exactly what I've given you tonight. Quick pause. If this is adding value, if this is helping you see the full picture instead of just one side, subscribe. I don't sell anything. No courses. No signals. No paid groups. Nothing. I will never sell you anything. Mr. AG is free and stays free. If you want real-time updates between videos, join our WhatsApp community. The link is in the description. Follow us on X at Mr. AG Asian Guy. Those are the only places you'll find me. If anyone else claims to be me somewhere else, it's not me. Protect yourself. Free key takeaways, and we're out. Number 1. Silver at 89 is pressing against 91.20 resistance. A break above 91.20 opens 96 with limited resistance in between. A failure at 91.20 and loss of 85 targets a retest of 80. The 50 EMA crossing above the 200 EMA and higher lows since 80.50 suggest accumulation. RSI at 60 shows building momentum without being overextended. 91.20 is the level that decides everything for silver this week. Number 2. Gold at 51.83 is holding its trend line and the 50 EMA, but facing seller resistance at 52.76 with upper wick candles showing distribution. A break above 52.76 targets 54.10. A break below 51.75 targets 50.014. The Iran situation is providing safe haven support, but the dollar and inflation expectations are capping gains. Gold needs a catalyst to resolve this range, and Wednesday's CPI could be exactly that. Number 3. Wednesday's CPI and Friday's PCE are the most important data prints of the week. Hot inflation means a hawkish Fed repricing, stronger dollar, and headwinds for metals. Soft inflation means maintained rate cut expectations, weaker dollar, and tailwinds for metals. But the Iran war's inflationary impact may not yet be reflected in this data, creating potential for a false signal that gets corrected in subsequent months. Trade what you see, not what you expect. Have levels. Have a plan. Know your risk. The Iran situation is unresolved regardless of what either side says publicly. The dollar is retreating but could reverse on hot data. Oil is rising, which feeds into inflation, which complicates the Fed's path, which affects the dollar, which affects metals. Everything is connected, and the next 48 hours will tell us which direction these connections resolve. For those of you who are new here, welcome, but hear this. Have a plan. Know your position size. Know your time frame. Know your levels. If you don't have those 3 things figured out before the market opens, step back and think before you act. I don't tell you what to buy or sell. I give you the data and the levels in both sides. What you do with it is on you. Be accountable. Do your own due diligence. Drop Mr. AG and your country in the comments. Let me see where this community is watching from tonight. Subscribe if this adds value. Share it with someone who needs the full picture. Mr. AG out.